Hey, welcome back, or welcome to those of you who are new to the Freedom Income YouTube channel. So in this video, I just wanted to show you how I time the market, or how I anticipate market corrections, and what's the sort of best plan, especially during such a market condition right now. You know, there's a lot of fake breakouts, there's a lot of market consolidations, there's quite a lot of uncertainty at the moment in the markets, and I just wanted to show you how I time these things, etc. Now, first of all, I want to say that I'm not a financial advisor, so do your own due diligence. Also, I just want to say that it is very, very difficult to time the market exactly buying at the bottom and precisely buying at the top. It's just too difficult to do that. However, the indicators or the setups that I'm about to show you, the way how I anticipate the market, or part of it anyway, there's more to it, but in this video I don't want to make it like a 1 hour video, so I'm just going to show you the basics of it and how you can sort of quite accurately anticipate or predict what's happening in the markets. Of course, during market consolidation, you can still scalp and day trade, but as a swing trader, which is mostly what I do, it isn't effective because it is too consolidative. You can't catch enough of the move. And so instead I do scalp as well, so I'm scalping a little bit just now, but I prefer not to scalp as much because it's just much more work, higher risk and less reward. But I still do it a little bit, because I can use the shorter time frames to tell me what I anticipate the immediate or the immediate perhaps potential of the US 500 or your indices are going to, which way is going to move, so I can then trade accordingly. But I prefer swing. So anyway, let's get to it. The way I do it, first of all, I've got this indicator, which is a specific indicator built for the SPX, which is your US 500. So this is a unique indicator, perfectly built for. It's almost like your Fibonacci levels for your SPX specifically. Okay, this indicator doesn't work for other instruments, so don't use it on the other instruments. Just use it. It could work on perhaps a few other indices, but it is built for the SPX. So I'll just use it for the SPX. So SPX is basically like, SPY, SPX, US 500, S&P. They're all pretty much the same thing. So basically, you trade it off the daily. You see how this blue dynamic support holds the price above it, pretty much. Like, in fact, let's just go back even like 5 years, right? Look, let's go back in history here, right? Let's do it from here, wherever. What is this? It's 2016, okay? So that's 5 years, right, from here, okay? This is 5 years of S&P data during a bull run, okay? During a bull market, the price of the S&P on the daily chart this blue support, dynamic support, will hold the price above it, right? So basically, how I do this is I would buy the stocks, right? So because the S&P tracks your stock market, right? If the S&P rises, your stocks rise. Your stocks are bullish, right? If your S&P drops, your stocks are bearish. So whenever this indicator or the price touches this blue line, that's where I add my initial positions, right? So if, let's say, I add a position here, sure, I would have had to hold a little red, but it will turn green pretty much soon after that, right? And what I would do, I wouldn't add all in here. I would actually maybe go in half, and or even a third, depending on what your character and your risk reward tolerance, right? What happens then is, because there's no guarantee that this will hold, because during a bear market, what happens is that the price breaks down. It could go to this level or even this level. The price hardly ever goes to the red level, only when they're like once in the last like 10 years or something, if you look at the data, and that was because of the COVID dump. It was just a huge crash. It only really goes there if it was some huge economic turmoil, something huge happens and it dumps. Everything dumps, right? So what I do is I add half or a third here, and if it does drop to the green, I'll add more. And if it drops to orange, I pretty much add like most of my positions. And that's how I would play it. So let's say, look what happens. If you add your stocks here, right, and wait for it to go up, right, when it's nearing or when it touches the green level, that's what really, when the stock market, right, this is just the S&P, right, but if the S&P was to touch the green, I would sell most of my stocks, and a lot of the stocks I would have probably sold before it touched this green, because don't forget, this is the S&P tracker, but some of the stocks during this bull run here would have gone up, like penny stocks, maybe 100, 200, some even 1,000%, or the blue chip stocks might have gone up already 20, 30, 40, 50% anyway during this time, so you would have probably sold your stocks along the way there anyway. But what I would do is I'll keep a track of this, and if this was to touch the green button line, I would sell most of my positions, at least half, because what happens is that's going to test it and it's going to dip a little bit, right? So if I had sold everything there, or most of it there, or my stock wise, right, I probably would have sold a lot of my stocks along this range anyway, because you didn't have to do your technical analysis for each of your stocks, which is different. You wouldn't use this indicator for it. Check out some of my previous videos, which I show you some of the other indicators or setups that I use for swing trading stocks, and the fundamental, technical, and sentiment analysis that you need to do in order to make sure you're investing or trading into the right stocks. So if you actually have a look at this, the blue line holds super well, right? Look at that. Every time it drops towards it, it holds, right? And that's where you start buying positions in stocks, right? Just keep looking at this, right? Watch this. See, that's where you would add your initial position. If it dropped more, you buy more at the green, at the orange, right? Again, buy more here, buy more here. Right, stocks. I'm not talking about, you could go long on the S&P as well, because then you make some as well. You could swing trade the CFD of US 500 if you wish. I'm talking stock wise, that's how you would time the stock market, right? Again, you can't time it perfectly. Nobody knows that this is going to hold, right? There's no way you can say with 100% confidence this level will hold the price up. So what you would do then is you would go in half, like I said, or a third of your position. If it dropped to here, that's where you go in more of your position, right? And don't forget, during this bull run, you probably would have sold quite a lot of stocks already, because that would have gone up, right? And then you might have added more here, but let's say it drops, right? Let's say you added more here, right? If it drops to this level, you add more, right? Pretty much most of your position there. And then look, within some time, you would have made everything back anyway on the way up, right? So this is what you call dollar cost average. You dollar cost average down on it so that you ride it up. And if you look at the history of the stock market over the past whatever years, the history, right, it always recovers, right? Like after the COVID, even though it dumped huge time, it went to all-time highs and is right now at all-time highs again, right? So if you look at the history, the stock market always has recovered, right? There is no guarantee saying that the US market, the stock market will be there like 100% with guarantee that it's going to be there, right? Because I mean, it could disappear, I suppose, but the chance of that happening is so low, right? So what happens is that, because for so many years the stock market has been there, and Warren Buffett and all these people like Ray Dalio, Warren Buffett, and Charlie Munger, whoever, all these like big investors, right? This is how they make a lot of their money, right? To in the stock market. So and again, in general, what you want to be doing, I think, in trading is that you want to be looking at it the long term, right? I think trading blindly is like going to the casino. It's not much difference. It's 50-50. But if you time the market looking at this big picture correctly, and then if you time your entries on the specific stocks correctly, and understand the fundamentals and the sentiment and the technicals of the stock, if you look at it in a long-term perspective, I think the win rate is actually really, really high if you know what you're doing, especially if you have risk management. Right? The only difference in my case is that I'm a swing trader, so I like to look at trading on a long-term basis, but I would buy and sell timely, so I catch a really good sizable move as a swing, and before the RSI or the stock becomes overbought, I would sell it so that I don't have to hold through corrections. Because sometimes if you look at stocks like Tesla or whatever, goes up 50-100% and then it drops by 25-50%. Why hold through that 50% of red when you can maybe sell it, when you can anticipate that move and then buy it back, right? But anyway, let's just continue here. Add position here, ride that. Add position here, ride that. Add position here, ride that. Right, this is the COVID dump. This is the only time in the last 5-6 years that we looked at the data that actually went as low as this. Right, the orange line tend to hold super well. In fact, the green line holds a lot of the time, and of course the blue line holds most of the time. And look, during a bull market, this blue line holds the price up consistently, right? Look at that test, right? Buy here, sell, buy, sell. If it goes all the way to the red, just sell pretty much all your positions, because the stock market has nowhere else to go from there but to go down. There's no, well, it can go up more, but it's just at such an extreme end, it's got to drop a little bit. Again, buy more here, sell, buy more here, sell, and right now, the way I'm looking at this right now is that this is on a down from this green line, right? So this could essentially go to here. So right now what I'm doing, I'm about 1/3 at this moment in time, about 1/3 in stocks and cryptos, and I'm 2/3 in cash. Cash is a good position during a potential market correction or crash, because you don't, you can then buy it on the dip. So if the S&P was to dip to between 3,700, if the S&P was to dip below 3,800, especially if it goes to between 3,760 level to the 3,700 level, that's where I'll be adding more positions. Ideally, I want to see that happen, but that might take a few days to play out. If it does drop more, then I'll add even more on those lines. That's how I'm playing out this this S&P, right? And the other thing that I'm anticipating a drop in the S&P is the VIX, right? Again, if I'm on the VIX, ignore this indicator now, because that's only for the S&P, it's not for the VIX, but just ignore that, right? So right now, if you actually look at the VIX, what's happening with the VIX? VIX is the volatility index for the S&P 500. When VIX rises, your S&P drops, right? Because this is the COVID dump, right? When you see your US 500, what happens is that it dumps, right? But the VIX rises. As VIX rises, the stock market dumps, right? So watch what happens now. Right now, VIX is at 19 is a key support. Look, for more than 1 year since here, which was February last year, the VIX hasn't broken below 1850, right? So if VIX breaks below 18, I can be bullish for some more time to come. But if but it's highly likely it will hold the $18.50 range. That support should hold on the VIX based on all this pattern and data, because that support has held so strong, super strong for the VIX. So I'm expecting. That's why I expect the VIX to rise, which means the stock market will likely drop. And based on that, I would like to see the stock market drop to about this level, and that's where I'll be accumulating more positions. Ideally, if that plays out, I might start accumulating like around the high 3,700s, because just in case it doesn't touch that, there's no guarantee that will touch that. Again, you cannot be 100% precise to time the bottom and the tops, but this gives you an idea how you would enter. So if it was to touch that, I would definitely go in quite some more positions. So that's how I'm sort of playing it. Again, with Bitcoin or cryptos, you can use this, which is the Bitcoin logarithmic bands. You can time your Bitcoin, like look at these levels, how accurate the hold. Look, price test there, rises, right? It goes up to this level, drops, comes and tries to test this again, goes up, tests that level, right? Consolidates at this level, consolidates at that level, drops to this level, goes up, almost tests that level, drops to this level and starts to rise, right? So these levels are quite good for sort of timing your entries and exits. Again, these are sort of long-term indicators, so you want to look at the daily with them. But if you want to go down to the hourly and 4-hourly as well, just to see what the imminent future brings, you want to be using other indicators such as your EMA, stochastic, MACD, or RSI, or support resistance, trend lines, or even the super trend is quite a good indicator in itself. Again, personally, as a swing trader, I trade off the daily, 4-hourly, or hourly. I don't really look anything below. When I scalp, I might use the 15 minutes, but otherwise, I swing. So these are the kind of things. Another few things I want to show you is the Shiller PE ratio. Right now, right, this is how overvalued the market is. Right, Black Tuesday was there. Right now, is actually above the Black Tuesday back into the 1920s. So this is the second highest point in history the stock market in terms of overvaluation. And you got the Buffett indicator, which again tells you how overvalued or undervalued or average or correct value the stock market is. And right now it is higher than ever. It is the highest overvalued point in history so far, right? So that's sort of giving you a little bit of information there. And then you can check the fear and greed index to see what the fear and the greed is. And with all of this together, everything there, you then can anticipate what, based on everything you've done there to make a move on your stocks, or like what stocks you want to buy. You want to be buying really, really nice. You want to be buying intrinsically sort of undervalued bargain stocks like PLTR, NNDM, or these kind of, or NEO, Tesla. These kind of Tesla's PE ratio is a bit way overvalued, but at the same time there's so much bullishness, because Elon Musk, whatever he touches, it tends to work, and he is actually Tesla's actually accepting Bitcoin as a form of payment for their vehicles, right? Elon Musk just announced that literally this week. That is super bullish news for Bitcoin. If Elon Musk gets into something, it tends to work out. So I'm super bullish on Bitcoin. I've been bullish on Bitcoin actually since last year. So I kind of got in my first position on Bitcoin when it was about $6,000 or $7,000 last year, sort of May, April time or so. So yeah, so these are the ways that these are what I'm watching, like sort of monitoring, and these are the sort of how I would time my entries or exits for my stocks. Again, you cannot be perfectly bang on, but these can really help. Again, if you go to the individual stock, you want to be doing individual technical analysis, watch my other videos on YouTube, which I've shown you these other indicators or setups. Thank you and happy trading.